Welcome back, everyone, to Money, Metals, and Mining Virtual Expo. We are pleased to welcome this next presentation from our silver sponsor, Crown Exploration. We have Shane Shanafelt. He's the founder and chief executive officer of Crown, and also grew up in a family engaged in the well servicing business. Mr. Shanafelt attended Texas Tech University and holds a Series 22 and 63 license from FINRA. Shane, thank you so much for joining us today. It's all yours.
Hey, thank you for having me. Hello, everybody. Again, my name's Shane Shanafelt. I put together a little PowerPoint to kind of explain what we do and who we are. So if everyone's with us, I'm going to go ahead and get started. A brief history mentioned earlier. Crown has been around for 25 years. We started in 1997 as a newcomer, primarily drilling in the Barnett Shale and locally across North Texas. Throughout the 2000s, we continued to develop long-term relationships with landmen, geologists, et cetera, and have continued to grow and drill and put projects together. Today, we continue to strategically drill, and we've kind of expanded that. Currently, we have over 223 wells that we have drilled across Texas, Louisiana, Oklahoma, Colorado, and Montana. In the years to come, we continue and will continue to live up to industry standards and stand strong on our decades-old commitment to excellence. Who is Crown? Hope everyone can see this. I'm rather new at these virtual events, but hopefully everyone can see what I'm showing here. Who are we and what do we do? We are an oil and gas company. We specialize in identifying existing fields with substantial infrastructure. We acquire leases, all the permits. We navigate all the regulatory environments, organize and manage each project. We partner with experienced operators, and that's probably one of our big keys as well. We partner with some of the best operators in the business. We have about 150 years of combined oil and gas experience that we put into each and every one of our wells. This map here is just kind of a visual representation of where we drill. So we're in Montana, North Dakota, Colorado, of course, Texas, Oklahoma, and Louisiana. Our primary focus has been Texas, but Colorado and Montana are on the horizon, and we've had some good success up there. How do we start, and what makes us different between all the others out there? It's really with our due diligence. Our objective is not to find new field discoveries or reinvent the wheel. We look for historical production that utilized old technology. We drill in areas that are surrounded by production, and we look for leases that have potential for additional wells. Lease control, well control, industry participation, which is important. And is there infrastructure in said field? If we're drilling a gas well, we need to know if there's gas transport lines in the area. If not, you wouldn't have anywhere to put it. So all of that has to be looked at and studied through our due diligence. This map here is an example of well control I mentioned earlier. As you can see, there are 9 producing wells. This red area right here would be our proposed location, our proposed location for a next well. We know that there is oil and gas production all around. We know what they have produced, when they were drilled, and we look for things like this. Now, you may look at this and go, well, you're drilling in the middle of a field that has 9 wells. What makes you think you're going to, produce out of this? Well, we look at new technology, newer fracs, newer ways to drill. For instance, a vertical well. Most of these were verticals. Drill a horizontal well. You can expose more of the pay zone and yield better results. In this particular area, the first well out there was drilled in 1969. So we have over 50 years of historical data that we can go over and determine where to drill and what we're looking for. This particular scenario with all the wells around is not new to us. That's typically what we look for. We look for areas that have proven reserves, have proven production, and that's what we look for. The next map is kind of a cross section, if you will, of a typical horizontal drilling well. Of course, up top, you have your drilling rig, and for this example, this is up in Colorado in the Niobrara Formation. We are drilling down 6,000 feet, and then we go horizontal another 9,000 feet. So you can imagine how much pay zone you're exposing by going 9,000 feet in your pay zone. Versus if you went vertically, you may only uncover a couple of hundred feet. This is one area, technology-wise, we're light years ahead of 50, 60 years ago with the horizontal drilling. So again, this particular example, we drill down 6,000 feet and then we go horizontal 9,000 feet. A total measured depth of 15,000 feet, total drilling. Our projects are put together as joint ventures, and it's a benefit to our investors. And how is that a benefit? Well, Crown is the managing venturer. So our partners don't have to worry about navigating a regulatory environment. They don't have to worry about filing papers, permits, et cetera. We handle all that with our expertise and our experience, and of course, our relationship. A joint venture, we are sharing financial exposure by sharing the risk and cost. All of our contracts, all of our drilling projects are done on a turnkey basis, which means it's a fixed price, regardless if the drilling costs go up, if we encounter any issues while drilling, need to add, anything like that. We don't come back to you and ask for additional capital to be put in. It's a fixed cost, so you know what you're getting into on the drilling side and on the completion side. Benefits of another benefit of doing business with Crown is access to greater resources. Of course, the newer technologies. I've talked a little bit about the fracs, about horizontal drilling, premium acreage. We have spent a decade gaining access with landmen, with people in the industry, knowledge as well as areas to focus on. Longevity in this business, experience definitely is a key. Putting these together through Crown, we're also able to do larger joint ventures. It's not uncommon for us to put together a $10 to $15 million drilling program. Potential monthly income obviously is what most of our clients look for when investing in oil and gas, and that's really what we do this for. Obviously, we're seeking to find oil, produce oil, and pay your proportionate share. Aggressive tax benefits, and I'll talk about tax benefits a little bit later, but of course that is one of the big benefits too. I'd say those are the two greatest would be potential for monthly income and a significant tax benefit. We offer all of our joint ventures through a broker dealer. It's an affiliate broker dealer for Crown Exploration only. Last year, or this year, I should say, the year's almost over. We have funded over $40 million into drilling projects. I'm going to talk a little bit about the broker-dealer, and that's Texas Securities. Texas Securities is a captive broker-dealer just for the benefit of Crown. So they don't sell any other securities. They don't sell any other stocks, bonds, any other projects for anyone else, just Crown Exploration's drilling programs via joint venture. Excuse me, we were formed in 2003. We were registered with the Securities and Exchange Commission, a member of FINRA and SIPC. Most of y'all probably are familiar with some of those terms, but I'll back up a minute and discuss that. Anyone that has a brokerage account, money market, et cetera, is typically done through a broker-dealer, member of FINRA, et cetera, and our broker-dealer, Texas Securities, is no different. Our brokers have about 145 years of combined experience offering oil and gas. You also have the assurances of a broker dealer. There's no bad actor. So all of our brokers are screened background wise, no irregular activity. So everyone's clean there. Our brokers have to have this professional license through FINRA, either a Series 7, 63, and 22. And this is kind of a new one, but it's SIE, which is basically a front runner of all of that. So they have to have at least 3 of the 4 here. We have annual regulatory audits through the BD, including Regulation BI. We have an in-house compliance team. We have weekly and monthly meetings with Crown. So Crown has the ability to step out into the broker-dealer and have weekly meetings to pass that knowledge along, project knowledge, industry knowledge, well status reports, updates of any sort, as well as production reports. So that's really a key, because you don't have a brokerage or a broker selling a product that he doesn't know anything about. These guys know start to finish what we're doing, what our project consists of, and all the ins and outs. What do we offer as Crown as a whole? I've talked a little bit about, we put joint ventures together. We drill in areas that have production. Again, we don't try to discover anything new. We try to go in and we don't reinvent the wheel, I guess is what I'm saying. We try to go in with newer technology and have positive results. But at Crown, we like to say we offer a white glove investment experience. And what's that mean? Well, we have a state-of-the-art website. It's new this year, crownexploration.com. Within that, we have an online venture center. You can, as a client, you could get your drilling updates, production tracking, monthly check stubs, along with your joint interest billing, and a K1 history. Open communication with TSI representatives. We do well site visits. This particular photo here is our office, almost all of them, going out to see a well that was being drilled. And we offer transparency, every step of the way. Crown joint venture typically would look something like this. This is an example. The project is offered in units. Generally, each project is between 30 and 50 units. Unit cost is around 280,000, plus or minus, depending on how deep, what area we're in. Of course, there's a lot of factors in that. We can do multiple or fractional units. So if one unit is $280,000, it's not uncommon for someone to do a half of a unit, so $140,000 investment. Our investment minimums, if you broke it down to the smallest unit, comes in around $30,000 for a minimum investment. Monthly income is based on monthly production, and simply said is if if we have a well that produces 100 barrels a day, 30 days, it's 3,000 barrels of oil, you're paid your proportionate share based on your owner participation. Aggressive tax benefits. 100% of your investment is an active deduction from gross income. Ultimately, 100% of your investment is written off, not in the first year. The only way to write it off 100% in the first year would be if you had bad luck in a dry hole. But ultimately, all of it is written off 100%. I would say, though, you need to talk to your CPA for your own tax advice and what works for you. Typically, upfront, the upfront write-off is typically 50-60%, but that can vary wildly. But ultimately, and I'll get more into some of the tax benefits, but there are aggressive tax benefits, and our clients really seek those out. Again, it's monthly income and tax benefits to go with it. I got an income example here, and I just use round numbers. I pulled this from the air. It's not an unlikely scenario, but this is this scenario is by no means. It's just an example. If you had $100,000 investment and you bought 1% of the net revenue, which means you would get 1%, you'd be paid on 1% of what the well, or proportionate share of the well produces. In 1 month, if the well produced 3,500 barrels of oil at $85 a barrel, it's $297,000 for the whole well. We're going to add in a little bit of gas. It's 15,000 MCF of gas. It's $750 an MCF. That'd give you $112,500. We're going to take operating expenses for the month at $25,000, and the well income is $384,000. Your September production income would be $3,845, $3,845 on a $100,000 investment under these variables. Your 12-month ROI is about 46%. Now, that number can vary wildly depending on how you use your tax benefits and what are tax benefits. This is just dollar on dollar, so it's something to think about. Again, legal will get to me, but market prices and production may vary substantially. Again, this is only an example. We're going to talk a little bit about potential tax benefits. I want to start off by saying you need to consult with your own tax advisor to discuss the impact on your personal taxes. But intangible drilling costs, 100% deductible in year one. Doesn't necessarily mean 100% will be deducted, but 100% tax deductible in year one. Your intangible drilling costs are 100% deductible in year one. Your tangible drilling costs 100% tax deductible, and those are put out on a schedule, a depletion schedule, if you will. Your depletion allowance is 15% of the income. So your oil and gas revenues, 15% of that income is tax-free. That's the small producer's income tax. Tax advantages are active income deductions against your business income, salaries, capital gross income, and interest income. This is just a quick example of, it'll kind of explain a little bit about the intangibles. You're still taking the $100,000 drill and test investment, your initial investment of $100,000. In this example, you had an intangible drilling cost of $85,000. So that's what we put into drilling. Your first year tax reduction at a 37% rate is $31,450. Your investment net tax reduction, so 100 to 31,450 is 68,550. that greatly impacts just these tax advantages greatly impacted this number, your bottom line. And that's what our clients typically look for. They look at an investment like this as they're going to pay tax, and they can pay the federal government. They can donate it to a local church. They can donate it to someone, a 501c3, et cetera. Or oil and gas is a great option to, one, lower their tax burden and have a potential for monthly income. Again, consult with your tax advisor. I'm not giving any tax advice. Just a quick in review here. Crown been in business since 1997, 25 years of experience and history. You have access to our in-house team of experts, and that goes from our compliance team, me, geology, landmen. We even send out annually kind of some explanation on K1. By the way, we get those out earlier than anyone else I know. We apply new technology in proven areas, and that's what we have done really since day one. We don't mind saying that, hey, we look across the fence and see what these big boys do, and we try to emulate that. We try to copy that. Access to premium areas. We're in areas right now with the likes of Chesapeake, Chevron, some of the biggest names in the business, and we drill right alongside them. Texas, Montana, and Colorado are really our primary focus, but we're open to anything that makes sense. Our investments are offered through our licensed broker-dealer affiliate, which is Texas Securities. Some people have confusion about that. Is like, who is Crown and who is Texas Securities? Crown, I am on the oil side, so we put our programs together. We manage the joint ventures. We do all of the lead work and all the day-to-day. Texas Securities is the arm that offers the joint venture in unit form, and it's more of an arm's length transaction between the two. Of course, having a broker dealer comes with all sorts of regulatory scrutiny, et cetera, which in the end is good for our client. We typically look for wells, and we look for areas that can provide long-term monthly income. Obviously, our goal is not to drill oil wells at dry holes for just tax write-offs. We wouldn't have much success doing that. So ultimately, what we're focused on is production and monthly income. How long can these wells last? It's anyone's guess. I wish I had the crystal ball, but it's not uncommon for wells to last many years. Some of the examples we saw in the earlier, some of those wells out there have been producing since 1969. I mean, that's a long time. Oil and gas investments are 100% tax deductible from your gross income. I can't stress that enough. It is by far one of the biggest benefits of drilling domestically is the tax benefits that come along with it. Our white glove investment, and that's simply what we do for our clients, service we provide as the managing venture, which means all of the regulatory, all the permitting, scheduling, drilling, reporting, check stubs, revenue, K1s, et cetera. All that's done in-house by a team. Most of our employees have been with us for 10+ years. Many have been over 15 years. So we have experience in it, and we have a pretty good idea of what we're doing and how to do it. I've been told, and excuse me, this is the first time I've ever done a virtual meeting. I've been told that depending on the time, we may have a little bit of time for some Q&A. And I would love to open that up if we can. Also, I wouldn't be a very good salesman if I didn't plug my. I have another event later this afternoon. I believe it's 2:45, 1:45 Central Standard Time. A little panel, maybe a little more freely talk about what we do at Crown, and I would invite everyone to come in and give that a listen as well. I appreciate everyone's time, and thank you.
All right. Thank you so much, Shane. Excellent presentation. We do have some time here, about just under 5 minutes for some Q&A. We had some questions roll in, so I'll relay those along to you.
Okay.
The question comes in. They're wondering, has it become more difficult with this current administration to get permits as far as the speed of processing?
To answer that question as simply as possible, obviously certain administrations present some challenges, but we do not drill on any federal land. Therefore, our permitting, our leaseholds, and all really are not that affected by our federal government. So to answer the question is, yes, I mean, if there is a downturn in drilling, i.e. if there's less drilling rigs on the market, it may be a little bit harder to get a drilling rig, but we find a way, and we've done it for 25 years without any issue. And so not really. We're able, fortunately, to be in Texas, and we can continue to lease and drill, at our will.
Excellent. Great to hear. Another question of yours wondering would an investment this year qualify for the oil and gas tax break in 2022?
Short answer is no. I don't think I would have anything that dollars would go to. The year's almost over. What, we got 20 days left? The long answer to that is yes, it can, but it's proportional depending on when you made your investment. So it is possible. Is it possible with me? I would say no for this year. We do have a new project coming up, but typically this late in the year, it's kind of hard to do.
All right. Another question of yours wondering, where do you see oil and natural gas prices going this winter?
Well, that's a good question. There's been a lot done over the last few years. Some may view it negative, some may view it positive, but to try to control pricing or bring pricing down. And, there has been some success in that, but I think ultimately prices are poised to rise and continue to rise. There are less active drilling than there was 3 or 4 years ago. Heck, even 3 or 4 years ago, 3 years ago, we were energy, independent. We were producing enough oil to cover what America needed, and we're not doing that now. We know that you've got the likes of Venezuela and Russia and et cetera, but domestically, our production, I believe, will continue to rise in price. At least that's what my crystal ball is. Thank you.
All right, thank you so much. Another viewer here, they're wondering, at the end of the year, will an investor receive a 1099 or a K1?
Is a K1. And generally, we get those out. I can't give you an exact date, but generally, we get those out before anyone else gets their K1s. I've never had any complaints about K1 timing wise, because I know they can trickle in, forever. But we try to get those out as soon as possible. There are also K1s are available on the Joint Venture Center on your investor online portal. You can get your K1s as well, but no 1099s. It would all be a K1.
All right, excellent. Thank you. And are both tangible and intangible drilling costs, are they 100% tax deductible?
Well, ultimately, your investment would be 100% tax deductible. Your tangibles upfront, and I believe in that example that I showed, is about 85% was upfront deducted, and the rest would be, amortized over time, depending on, you and your CPA or however you figure it out, over the, but ultimately 100% would be written off, correct. The only caveat, and I'll throw this in, obviously oil and gas, there's risk. And if you drilled a dry hole or if you got zero, it would be 100% at that point. But if you put a well into production, you have your tangibles and intangibles, and your intangibles will be amortized out.
All right, excellent. Well, Shane, that's all the time we have for this session. We do look forward to your next session starting very shortly, coming up.
I appreciate it, and thanks for having me, and thanks for listening.
All right, we'll talk to you very soon. Thank you.
Have a great day. Bye-bye.
All right, everyone, thank you so much for attending that last session here. Shane Schonefeld, Crown Exploration. Stick around. We have another great panel coming up. Shane will be joining us for that as well. So sit back. We'll be back with you momentarily. Thank you for being here.
Thank you.